Let's take a look at stock futures. They are pointed up at the moment. Higher as investors are looking to rebound after a brutal day yesterday, a day where President Trump showed that he is refusing to give up on his attacks against the Federal Reserve Chairman Jerome Powell. Uncertainty around the president's trade war, what he's saying about Powell, and the ripple effects from all of it continues to weigh on Americans across the country. And that's something that CNN's Harry Enten is taking a look at for us this morning. The stock market was down in a big way yesterday. How poorly has the stock market done since Trump took office?
Yeah, sometimes we look at the day to day and I feel like we can get lost. So let's take a look over the whole stretch of the Trump presidency as we approach day 100. The S&P has dropped the most under Trump for any president at this point in their presidency since the S&P 500 was in fact created back in 1957. And indeed, it is not anywhere close, folks. It's not anywhere close. Under Trump, it's dropped, get this, 14%. The next closest one was George W. Bush back in 2001, a drop of just half that at 7%. No other elected president at this point in their presidency saw a drop of 5% or more. So Donald Trump is on a planet all by himself, a planet you do not want to be on, the American people don't want to be on, in terms of the drop in the S&P 500 approaching 15% already in his presidency. No bueno.
So all of this and the ripple effects from the trade war have a lot of people talking, of course, about a recession coming, some even saying that we're already in a recession. Where are the numbers on that?
Yeah, okay. So, of course, this is the whole question, right? Is what happens on the New York Stock Exchange, what happens in the NASDAQ, what happens in the S&P 500, stay there, or does it then cascade across the economy? And at this particular point, there's a decent chance that it will cascade across the economy. Chance of a recession. You see, I have 4 different little metrics we can look at. JP Morgan, 60%. Polymarket, 57%. Reuters, 45%. Goldman Sachs, 45%. That's a bunch of numbers on your screen, but they're all basically telling the same exact story. That is, on either side of 50%, there's basically a 50-50 chance of a recession at this point. And that is way up from where we were at the beginning of the Trump presidency, when the numbers simply put weren't anywhere near this. The stock market is a reflection of the economic state we're in. The chance of a recession is another reflection of the state of the economy that we are in. The bottom line is that Trump's tariff wars have taken what was a pretty gosh darn good economy and turned into a very uncertain economy, one in which the stock market has fallen and one in which the chance of a recession has gone up considerably, Kate Baldwin.
If there is a recession, how much blame is Donald Trump likely to face?
Okay, so this is the whole thing. Am I going to blame the last guy and I'm trying to fix the economy? Or is it we're going to blame this guy, Donald Trump, and the buck actually stops there? This is what the American folks say. If Donald Trump believes that he can somehow escape blame if there is, in fact, a recession, I'm here for a reality check. He will simply put not be able to do so. Blame Trump if there's a recession in the next 12 months. Look at this. A lot or quite a bit. That's the majority winner right there at 52%. A little or not at all, perhaps a little bit high, some might say, at 32%. But still here, the clear majority of Americans say that if, in fact, there is a recession in the next 12 months, which at this point looks about 50-50, the majority of the American public says that the buck will stop at the White House, stop at 1600 Pennsylvania Avenue, and Donald Trump will not, in fact, be able to escape blame if there is, in fact, a recession.
Harry Enten, thank you very much.
Thank you.
John Berman.
All right, with us now is Canadian businessman, CNBC contributor Kevin O'Leary. He's also the chairman of O'Leary Ventures. Kevin, great to see you this morning. You just saw that stat right there, that more than half of Americans would blame Trump if there is a recession. I know you're sitting in Canada this morning. Would you blame Trump if there were a recession?
Well, let me just say that we've been talking about recession now for 4 years in a row, you may recall. Forecasters of recessions have been wrong for 4 years straight. So probabilities of 32 to 55%, that's interesting, but we are not in a recession right now. It really depends on how long these tariff wars go on for. I mean, it's widely assumed right now that the European bloc, the British, Swiss, Canadian, and Mexican deals will get resolved in relatively short order. The giant question mark, and certainly this is on Powell's mind when he refuses to drop rates, is how long will the China situation last? Because that one looks far more complicated. It's not just trade and tariffs. It's IP theft and access to markets and WTO issues. there's a lot on the table at China. And so I would argue right now that people that count out the American economy are constantly wrong all the time. It's the largest economy on earth, represents, 26% of the world's GDP and almost 40% of all consumables. So it's a difficult, tricky situation, I agree. But I'm an investor. I have to make these decisions every day, and I'm not investing for a recession right now. I'd be pulling my horns in, and I want to remind you, the market's correct 20% all the time. Almost every 18 months that happens. And so why correct is different every time. This is because of scares on tariffs, but this is nothing new for the S&P 500. And frankly, it's often, and has been for over 100 years, a buying opportunity. The American economy generates 8 to 10% returns over the long run. And now you're getting to buy at a 17, 18 PE versus 23 just 4 months ago. It's a value deal.
I would say yes, there are corrections all the time. This is a little different, right? I mean, the Dow, the worst April since the Great Depression, the S&P, the same thing. There's a lot of focus on the stock market. The Wall Street Journal, which put out that headline today that got a lot of information, also notes it's not just stocks, right? The Journal writes, counterweights that usually strengthen when stocks fall, such as government bonds and the U.S. dollar, also under pressure. Yields on 10-year U.S. Treasuries, a key benchmark, have increased 0.16% in April. The ICE U.S. dollar index slips more than 1% Monday to its lowest level in 3 years. With other defensive plays falling short, investors have piled into one of the oldest hedges there is, gold. An all-time high for gold. So, look, the markets in general, not just stocks, are saying we're not so sure about the U.S. right now.
No, you're right. There's a lot of volatility, and that's what you get when you take these kinds of actions. No administration has ever taken on 60 trade negotiations simultaneously, let alone China on top of that. The job owning with the Fed that Trump is doing, every administration does. There's always the Fed is at loggerhead with the executive. The executive always wants interest rates down. The Fed has to worry about inflation. And really what Powell is saying, I don't know how long China's going on for, and that could be inflationary if it lasts months and months, so I'm not going to drop rates. So all of this stuff is we've seen this movie before, and the volatility index is very high, the VIX. But that's because of the nature of this administration. And I've always said this about Trump, I'm not advocating for Trump. I advocate for policy. I don't shill for politicians. I would like to see the China issue resolved once and for all. After 20 years, and as an individual who invests, and I want to do business in China, I've invested there, and I've said this multiple times in the last 6 weeks, I'm an example of someone who's really been screwed by the Chinese in IP theft. And I'm kind of done with it. So I'm very happy that some administration, this one particularly, is taking them on to resolve this problem once and for all. And Xi needs the U.S. and the U.S. needs Xi. So let's get this thing resolved. I'm okay with the volatility.
The China thing is a really interesting issue. I'm not going to give you the long quote. We have an Atlantic article here, but the Atlantic wrote last week, basically, taking on China is a good idea, and there might be a chance to win here, but Trump is doing it, says the Atlantic, entirely the wrong way, because the one thing you want if you're going to take on China right now, literally the number one thing is friends. So what's happened here is the president is also going after all the rest of the world who you will need, and you've taken away the one thing that gives you the biggest advantage over China.
You're making a good point. If you could get a union, which I think will happen pretty quickly, if you think about just the EU, Britain, Switzerland, Canada, and Mexico, that's about 72% of all the trade with the U.S. So if you get that resolved, it works. The one thing I would say that I've noticed as I do business all around the world, in the Middle East and in Europe, 50% of the people in the world have Trump derangement syndrome. And they still have a really hard time understanding why he's back in the White House. And I say to them, listen, it doesn't matter. He's in the White House. We have to deal with the policy, not Trump, the policy. Let's forget about the fact that he's in the White House. There's nothing you can do about it. He was elected with a majority. Let's get over the derangement syndrome. Let's focus on the policy and get stuff done. Because I've got to tell you, there's a lot of people that go out of their minds just the fact that he's back in there. And I realize it. It is what it is, but I've got to deal with it too. I mean, I just have to deal with policy. And I think you're right. If he gets this policy right and circles the wagons with the Europeans, the Mexicans and the Canadians, that's a more powerful charge against China. I totally agree with you there.
Yeah, we will see. We will see what happens there and if deals that are struck are convincing. Kevin O'Leary, great to talk to you this morning. We'll speak to you again soon.